from San Diego, California, this is the Frug Life Podcast, the show that teaches you how to save, invest, and earn money. Here's the host, Mr. Frugal himself, Ricky Hirsch.
Welcome back. Ricky here, and today we are diving into a corner of the financial world that this does not sound like me. I am using some AI to help with script writing, and we will see how that goes. I guess I'll warn you up front. It's Ricky here, and today we are diving into a corner of the financial world that frankly can be a bit alluring, but also incredibly perilous if you don't understand what you're stepping into. Today we're talking about exotic options. Now, fairly often, or at least I used to, get people who would reach out to me, mostly through comments on social media, and ask me, Ricky, are you familiar with binary option trading? And my answer is always, yes, I am. But it always struck me as a little odd. You see, binary options are just one specific type of exotic option among a whole universe of them. Yet for some reason, they've gained this disproportionate amount of popularity amongst a certain group of people, particularly newer retail traders. It's almost like they're the one exotic option everyone's heard of, even if they don't grasp the full picture. So let's pull back the curtain a bit. First, we need to understand what an exotic option is, and then we'll circle back to why binary options specifically seem to be on the spotlight. Think of a plain vanilla call or put option like a simple wrench in your toolbox. It does one job. It gives you the right, but not the obligation, to buy or sell something at a certain price. Straightforward, efficient, that's what it's designed to do. Exotic options, they're like those specialized, custom-built tools you see in a high-tech factory, designed for a very specific, often complex task. They come with all sorts of fancy names and even fancier rules. I was looking for a good breakdown, and here are just a few. Asian options, where payoff depends on the average price of the asset over a period, and not just at its expiration. My, that's difficult to predict. Barrier options, they activate or deactivate if the asset's price crosses a certain barrier level. So your option might suddenly come alive or suddenly become worthless just because a price point was touched, even if it immediately moved back. Look back options. These let you look back at the asset's price history and pick the most favorable price during the option's life for your strike price or settlement. And then, of course, as we've been talking about, we have binary options, sometimes called digital options. I guess I should caveat all this that AI helped me write this, and I'm not going to necessarily speak to AI's accuracy. It sounds decent so far. Anyways, binary options, their payoff is simple. You either get a fixed, predetermined amount of money if a certain condition is met, like the price being above a certain level at expiration, or you get absolutely nothing. It's an all or nothing bet, black or white, 1 or 0. Hence the name binary. So why were so many people talking about binary options? My general stance on most financial derivatives, and this applies to vanilla options, futures, and especially exotic options, is this. I don't recommend dabbling into them unless you have a very specific strategic goal in mind. Let me give you a classic, legitimate example. Imagine you're a farmer. You just planted acres of corn. You're going to harvest the corn in 6 months. You know what your costs are going to be generally, and you know what you need to sell your corn at to make a profit. In this example, let's say that we need to sell the corn for $5 a bushel. But we're going to harvest that corn in 6 months. And in 6 months, what is the price of corn going to be? We don't know. It could change. The market price for corn might drop. It might be $4 a bushel or $3 a bushel. So what should you do? And in this particular scenario, let's say that you can sell a bushel of corn for $5 today. Well, you could enter into a futures contract to sell corn at a guaranteed price of $5 in 6 months. Now, that's nice if the price of corn is less than $5. Now you're selling it for $5 and you've made off fairly well for yourself. If the price of corn went to $6 though, or $7, and you had to sell at $5, you'd probably be kind of sad. And so one thing you can do is use an option. As we said before, options give you the right but not the obligation to buy or sell. So you could buy an option, a put option, that protects you if prices fall. Now, the farmer engaging in this behavior isn't speculating, they're hedging. This could be part of a smart risk management solution. This is using a financial tool to ensure that you can profitably run your business, even if market prices fluctuate wildly. This is a valid and often essential use case for derivatives. Now, on the other side of the coin, if you're just a speculator, someone who's simply trying to guess which way the market will move in the short term, hoping to make a quick buck, then generally, options of any kind, especially complex ones, are gambling. Think about it. When you're trading binary options, you're essentially placing a bet on whether an asset will be above or below a certain price point at a very specific time. The odds are often stacked against you. There's generally going to be a fee of some kind to engage in a derivative contract, and with those fees, it's generally going to be a negative expected return, in my opinion. Now, in any market, small inefficiencies might exist, sure. Maybe for a fleeting moment, you might see such an opportunity. But let's be realistic here. The people consistently making money in these types of highly complex, fast-moving markets are probably not you, the individual retail trader sitting at home after work. It's going to be massive financial institutions, hedge funds with supercomputers and teams of PhDs designing complex algorithms. They have the information, the speed, and the capital to exploit these tiny inefficiencies before you even know they exist. Now, when it comes to your hard-earned money, the money you're trying to grow and protect to live the Frug life, a life of financial freedom and less stress, why would you introduce something that, for most people, is essentially a coin flip with built-in disadvantages? The Frug life isn't about getting rich quick through high-risk gambles. It's about getting rich slowly, securely, through smart choices, consistent effort, and understanding where you're putting your money. It's about optimizing your joy to stuff ratio. Remember? I actually don't remember that. Have I said that before? And I'd argue that the stress and potential losses from chasing exotic option windfalls don't exactly increase your joy. So should you trade binary options? My Frug life answer is almost always a resounding no. Unless you are a financial institution with complex hedging needs, or a specialized professional with deep market insights and significant capital, you're likely playing a game where the odds are stacked against you. Stick to understanding the fundamentals. Focus on building wealth through smart investments, saving diligently, and avoiding unnecessary risks. That's the real exotic option. The option to live in a truly financially free and abundant life. Thanks for listening to today's episode of The Frug Life. Welcome back. I just wanted to make one final caveat, which is that all the information in this episode, like any other information of the show, does not constitute financial advice. I guess the other thing I didn't explore in this episode too in depth is who are the people that are suggesting binary options. And I can talk about it a little bit right now, which is, I think, oftentimes the people that were reaching out to me about binary options were these kind of crypto bros. And it all seemed very sleazy and kind of scammy to me. I wrote this episode quite a while ago, and so it's kind of out of date already, in the sense that I think binary options have kind of lost their popularity. Please correct me if I'm wrong. If you or someone you know is very engaged in binary options right now, feel free to let me know. I may even want to feature some of their comments on the show if someone wants to feature a rebuttal of sorts of my opinions on binary options, and maybe even sharing a bit more knowledge about them. That could be fun. I am potentially working with someone in the near future on some options trading strategy, so we'll see how that pans out. I also have one last announcement, I think, that will run right after this ends and before the outro to the show plays. So listen to my big announcement. Thanks for listening to the show, and as always, stay frugal. Before you go, I have one last thing to share with you. A big announcement, which is the 2025 listener survey is now live. You can give your feedback on the show, and one lucky submitter will be selected for a fabulous prize, which is lunch with me, Mr. Frug. Now you might be saying, Mr. Frug, I don't live in San Diego. How is that going to work? And the answer is, I will come to you. I will travel to you and we will get lunch. Doesn't that sound fun? A chance to talk to me in person. Ask your personal finance questions or whatever you want. Lunch is on me, so sign up for the 2025 listener survey. Links will be in the show notes. Thanks for listening.
From San Diego, California, this is the Frug Life Podcast, the show that teaches you how to save, invest, and earn money. Here's the host, Mr. Frugal himself, Ricky Hershey.